This indicator or tool named Relative Strength Comparative is extremely powerful. But unfortunately, this concept is not being used extensively. This Relative Strength Comparative is a term used to describe the relationship between any two markets. Now this RSC is a measure that simply compares the performance of two securities, sectors, markets, or a security with a sector or market to show how strong or weak they are performing relative to each other. It compares two securities to suggest whether it has relative strength or relative weakness. Now this relative strength comparative is calculated by dividing the first security price by the second security or market, also known as the base security or benchmark. Now, how do we interpret this indicator? When RSC is moving up, the first security is performing better than the base security. And when RSC is moving down, the first security is performing worse than the base security, which would mean it is either not rising as fast or perhaps falling faster. And when RSC is moving sideways, then the first 10 base securities are performing the same, that is, rising and falling by the same percentages. Not exactly same percentages obviously, but more or less. Okay, so now pay attention to all the examples coming your way. So let's understand RSC on this chart. Tata Motors is a stock and CNX Nifty is an index. So we will be comparing the performance of a security with market here. Tata Motors is the first security here, and therefore its price is plotted on the right side. And Nifty is a base security here, and so the values are plotted on the left side. Now we have this bar chart of Tata Motors in blue and Nifty is in black. Now this red line that you see is relative strength comparative. Now this RSC is derived when first security price is divided by base security price, that is, price of Tata Motors divided by Nifty index value. So when RSC, this red line, is moving up, the same means that Tata Motors is performing better than the index. It is rising by a greater percentage than index. And when this line is moving down, this would mean that the stock is performing worse than the index. And when it's in a range, as you see over here, then more or less they are performing the same. Now remember something important. This weak or strong performance never means that the price is either correcting or moving higher. It simply suggests relative strength or weakness. Now let's see how well or worse this stock is performing. Now focus on this part where RSC is moving lower, and particularly this phase for better visual understanding. Now RSC is sharply moving lower, which does mean that Tata Motors is performing really badly compared to index. Here at this point, price was around 300, and this low over here, it was around 150. So that's 50% correction. And Nifty, on the other hand, had been trading somewhere around 3300 and 2900 here. So that's 400 point fall, which would be around 10%, more than 10%. I think it's around 12%. So in this phase, Tata Motors corrected 50% and the index corrected 12%. Now the question is how to use this reading. Well, the numbers are of no use, but this line RSC definitely is. If you are bearish on index, then you look to sell stocks having RSC moving lower. And if you are bullish on index, then you look to buy stocks having RSC moving higher. See how Tata Motors fared compared to index. The stock has been 50% down versus 12%. Now isn't that significant? So look for weaker stocks to go short when you are predicting the index to be bearish, and hunt for strong stocks when your views are bullish on market. And you can only pick such stocks through usage of this tool, relative strength comparative. Now let's take another instance. During this phase over here, RSC is clearly moving higher, and the same means that the stock is outperforming the index. Now let's confirm with the values for better understanding. Tata Motors was trading around 140 here, and here the price is somewhere around 270, 280. So that's roughly 140 points rise, which is almost 100% rise in price. Now during the same period, this Nifty rose from 2600 to around 3600, and that's 1000 points rise over 2600, giving a return somewhere close to 40%. So this stock is 100% up versus 40% that the market has returned. So the idea is to look for stocks having RSI line moving up if your views are bullish on the market. Now remember again that rising or falling RSI lines never mean that a stock is rising or falling compared to an index. It simply tells you a stock's relative strength or weakness. Now look this section of the chart. RSI is moving lower, but price is moving higher. The reason behind this line is moving lower is simply because the stock is underperforming the index. Both stock and index has been moving up, but index moved up sharply, the very reason why RSI moved lower. Okay, let's do more with RSI. This chart is plotting two stocks, namely Tata Motors and Maruti Suzuki, both from auto sector. Tata Motors is the first security here, and therefore its price is plotted on the right side. And Maruti is a base security here, and so the values are plotted on the left side. Tata Motors is represented in blue and Maruti in black colored bars. This red line is RSI. This RSI line is derived when price of Tata Motors is divided by the price of Maruti. When RSI is moving down, this would mean that Tata Motors is performing worse than Maruti. And when RSI is moving up, then it conveys that Tata is performing better than Maruti. Now say after preliminary research through RSI investigation itself, we determine that auto sector is going to outperform all other sectors like banking, IT, FMCG. But it certainly doesn't mean that you should buy any random stock from this auto sector. If you have to choose the best one from the rest, then RSI bails you out from such situation. So you compare two good companies from the sector, and RSI helps in the determination of the stock that should be preferred over other. If you look at black and blue bars, then both are certainly rising. Price is indeed going higher for both the stocks, but clearly Tata Motors is outperforming Maruti. Let's use the values to establish the same. Now during this period, Tata rose from 270 to 810, and that's 540 points and 100% return. Maruti, on the other hand, during the same period, rose from 1120 to 1460. That's 340 points difference and a return around 30%. Now this 30% or 100% return has got nothing to do with trading. It is simply suggesting that when the RSC is up, then first security fares better than the base security, and accordingly we should look to trade Tata Motors whenever there is an occurrence of a trading setup. We will be looking to buy Tata Motors on all occasions until the trend changes for RSC. And do not forget that a trend in RSC never suggests a stock to be bullish or bearish. RSC only depicts where a particular stock, sector or index stands in relation to another. Trading ideas can come only out of stock charts and nowhere else. RSC isn't a trading strategy. RSC indicates you which one to prefer over another. Once you know about the relative strength or weakening position, then you use concepts like trend lines, support resistances, chart patterns, divergences, indicators, etc. for trading. So let's do this exercise one more time before we wrap up discussion on relative strength comparative. We have IT index and bank index here. This area we are having higher highs and higher lows for relative strength comparative, which does mean that IT is outperforming banks. So we look to buy IT whenever we get an opportunity. We have this trend break over here on RSC and the trend changes to down. Remember that this change in trend doesn't mean that trend has changed for IT index. Don't make this mistake. What it means is that IT is not outperforming banks anymore. Banks may have started to outperform IT now. You see here higher highs and higher lows for IT index. Now when trend of RSC changes, observe that trend of IT never change. See, the price keeps on rising only, but still RSC drops significantly. Now that's because banks are generating more return. They are now starting to outperform. So we should now focus on banks for taking position. Now we go to banking chart. Trend changes for this bank here, and accordingly it's appropriate now to take long position in bank whenever a trading opportunity comes. Now this point onwards, we again witness a trend and break for RSC. IT also does make higher high and higher low, indicating that IT has again started to outperform banks, and we must shift focus to IT again for better opportunities. Trend continues to be intact for IT, a rising trend, and accordingly we will look for bullish setups.